Welcome everyone to Vested Interest. This is Shane, and on this video we are going to cover the weekly portfolio update. We do these every Sunday, but before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. For those of you who may be stopping by for the first time, on this channel we focus on dividend growth investing. It's not rocket science. In my opinion, the best way to do anything, keep it as simple as possible, so it really boils down to consistently investing, dollar cost averaging into the portfolio on a weekly basis, buying dividend growth stocks and growing companies with positive cash flow that covers the dividend, and companies that have a high return on their invested capital. I utilize, like I said, about a dollar cost average approach, consistently investing in the portfolio every week. I also do larger purchases if I get a bonus or run into some extra funds. I cover all my investments into the portfolio on this channel. I do not have a paid Patreon account. I'm not trying to send you any other sites that you have to log into or give me your email or phone number or any of that. It is free to see what I'm doing. But if you would like to help me out, if you could do me a huge favor, click that thumbs up button down below if you find any value in the content. If you're a dividend growth investor, make sure you subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Click that notification bell so you're notified whenever we put out any new content. Along with these weekly portfolio updates, I do a stock pick of the day series Monday through Thursday whenever the market's open. So join us back for that one, and drop a comment down below. I do personally read and respond to the comments. I'm always interested to know what's going on with your portfolio. What are you buying? What have you been adding? I know the market's starting to pull back a little bit. We were at all-time highs here, a week or two ago. Maybe you were selling. Let me know in the comment section down below how your portfolio is doing. What are you looking to buy as the market pulls back? Do you have your eye on some stocks and waiting for them to go on sale? Again, I'd love to hear from you in the comment section down below. Let's get back to the portfolio update here. We will start off with options. We did have a couple options plays that hit this week. And not on Tuesday either, whenever the market opened. We went back in on Wednesday. On the 4th, September 4th, we had two covered calls, one on Starbucks. So that -1 means one contract. That means we have 100 shares. To do a covered call, you have to have 100 shares. One contract represents 100 shares. The covered call was on Starbucks, ticker SBUX. That's the company, with a end date of September 6th. So that's the expiration date, and a $96 call. So it would have to be $96 or lower, and this one would have been called away. It was not, as you can see down here, the Starbucks call. It expired out of the money, so that means we keep this $30 per share minus the 55 cents in fees, $29.45. And the other one was, again, a covered call sold to open on BABA, ticker BABA, out of the consumer discretionary sector. This is a Chinese company. BABA, same expiration date, right? September 6th, strike price of $86, and just happened to be the exact same $29.45 after fees. Total in options received $58.90, and this is part of the 1,500, a little over 1,500 we added to the market. Whenever we do these options plays, this goes right back into the portfolio. Whatever I'm buying that week, I'm adding it to it. What I've started to do, or what I'm going to do going forward, is as I have these options play and they hit, whatever I need to add to extra, or if they happen to buy, what I'm going to be buying with them is SCHD. So I'm going to be running options to purchase extra shares of SCHD. So on top of my 1 share a week, any options play money that we get is going to go into SCHD as well. At least for the foreseeable future, I'd like to get SCHD to 100 shares as quickly as possible. So that's part of the reason why. Now on to the first dividends received. September 3rd, we had dividends roll in from a couple companies here. All total, we got $155.72. That was broken down between Pfizer, ticker PFE, out of the healthcare sector, and Kroger, ticker KR, out of the consumer staple sector. And starting off with Pfizer, they paid us $123.35, which we do have the drip set. So whenever a company in the portfolio pays out dividends, those funds go right back in and buy more shares of that same company. In this case, picked up 4.32926 more shares of Pfizer. And Kroger also paid us out $32.37. Same thing, we have the drip set. So that goes back in and picks up 0.60672 more shares of Kroger. And these new shares added an additional $8.04 in passive income over the next calendar year. So this is what you hear of whenever you hear the dividend snowball effect. This is what you're seeing. So we have shares of Pfizer and Kroger in the portfolio already. Those shares pay out dividends. Those dividends go in and buy more shares of that same company. and then those new shares add additional passive income over the next calendar year. Apologize for the noise in the background. That was one of my daughters opening up the garage door there. So again, $155.72 total in dividends received on September 3rd. And that was not the only day. We also received dividends on September 4th. This should say the 4th there. And we received $371.21 in dividends on that day. So very good week for dividends overall. This $371.21 broken down between LyondellBasell, ticker LYB, out of the materials sector, Enbridge, ticker ENB, out of the energy sector, and American Waterworks, ticker AWK. This is a utility company here. Starting off with LyondellBasell, ticker LYB, they paid us $159.34. These funds, again, we have the drip set, so they go right back in, picked up 1.65712 more shares of LyondellBasell. Enbridge paid us out $133.39. This went right back in and picked up 3.28992 shares of Enbridge. Enbridge is a Canadian company. My brokerage takes out the taxes associated with this being a foreign company. When they pay out the dividends, you need to understand if your brokerage does or not, because if your brokerage does not, then you will be responsible for those taxes at the end of the year. Make sure you understand if you own any shares of foreign companies, this one being out of Canada, you are responsible for the taxes associated with the dividends and with the sale of that. And like I said, my brokerage takes it out. Yours may as well. You just need to understand whether they do or not. All right, American Waterworks here, ticker AWK, they paid us out $78.48, going back in and picking up 0.54199 more shares of American Waterworks. These new shares and this $371.21 that picked them up added an additional passive income over the next calendar year of $19.39. And that's it for the dividends. Now we get into the new purchases of the week. A lot of activity in the portfolio this week. Now we're on to the new purchases. September 4th, whenever we ran those options plays, we went in and made our first purchase of the week. We added $1,038.30 to the portfolio, broken up between Comcast Corporation, ticker CMCSA, out of the this is out of the communications sector, and Alphabet, Google, ticker GOOG. This is the newest position in the portfolio. We're going to try to build this out here over the next couple of months. Hopefully it pulls back. It actually has started to pull back and is starting and continuing to pull back over the last couple of weeks. So that's good to see. I wouldn't mind this one dropping 20, 30, 40% or more so that we can really build this out on the cheap. We'll see how it goes. We're going to continue to add regardless of what the price is, probably over the next, like I said, couple of months here. So we picked up 6 shares of Comcast, $39.84 per share, 5 shares of Google, ticker GOOG. There is another Google out there, GOOGL. I believe the only difference is between the two is one gives you the ability to vote as a shareholder. The other one does not. I believe it's GOOGL that gives you those voter rights. I'm not as concerned with voter rights. So you pick whichever one, or maybe both. Maybe you want to do both. But pick those shares up at $159.86. I think by the end of this week, or the end of the week here, the past week, it was down to about $152. So again, this one has continued to pull back, and I'm going to continue to add as it pulls back. Hopefully, it does continue to do so, because I love to buy stocks as cheap as possible, and I'd like this one even cheaper. Passive income added from these new shares of Comcast and Google, $11.44 over the next calendar year. We weren't done. We went back into the portfolio on Friday, September 6th, added an additional $468.66. We bought 3 shares of Vale, ticker VALE. This is a mining company. This is also a foreign company out of Brazil. So again, understand the tax implications around these companies. Your brokerage is either taking it out for you or you're responsible for it yourself. Understand which way you got to go with that. 2 shares of SCHD, like I said, partly my weekly shares. This is one of the companies that I buy weekly shares of regardless. So I'm going to buy at least 1 share. But if we do run options plays, I'm going to sink those funds. And I had to throw in, about $30 extra or $28 extra here, and bought an extra share. So we picked up 2 shares of SCHD, Schwab Strategic Dividend Growth ETF here at $83.13 per share. And we picked up our 1 share of Vanguard's Total Stock Market, ticker VTI. This is the other one, the ETF we're going to be buying every week regardless of the market. We picked up that 1 share at $271.62. Passive income added from these new shares, $12.58. Total invested this week, $1,506.96. Again, part of this was the options that we received. And total passive income added for over the next calendar year, $51.45. Now let's run through the sector weights real quick. Quick update there. Communication sits at 10.62% of the portfolio. Consumer discretionary at 8.04. Consumer staples makes up 9.70. Energy makes up 6.10% of the portfolio. Financials sitting at 5.37. Healthcare is the largest slice of the pie here at 14.22% of the portfolio. Industrials at 6.52. Technology makes up 7.1%. With the addition of Google, we're probably going to get this to 9, 10, if not 11% of the portfolio by the time we're done building out the Google position there. Materials sitting at 8.67%. Utilities makes up 9.66%. REITs in real estate sitting at 9.42%. And ETFs still the smallest slice, though it won't be long before they overtake financials as one of the larger slices in the pie here, and then financials I believe will end up being the smallest. But right now ETFs at 4.54%. Over here on the right, you can see the portfolio sector weights broken down by the percentages that matches the pie here, as well as the dollar amount allocated across the portfolio. Now here it is. I do this every week, weekly portfolio updates here. I want you to see a real portfolio built out over time, the ups and downs associated with it. There's going to be red in your portfolio. There's going to be green. Hopefully seeing a real portfolio built out by a real person over time helps some of you newer investors understand the ups and downs of the market. Whenever you see red, that doesn't necessarily mean you should be running to the sale button and clicking sell, 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 or sell, sell, sell. You should probably, if you've done your due diligence, if you've researched the company, if you set a good buy price, if you understand the fundamentals of the company and are their margins expanding, is their revenue growing or decreasing, why did you buy the company in the first place? So long as the fundamentals of the company are the same, if you see red and it's below what you feel is a good cost basis, or the right price for you, you should be buying. That's what you should be doing. A lot of people lose a lot of money whenever they see red, they panic and they sell. That's not what you should be doing. So hopefully, again, seeing a real portfolio built out over time encourages some of you out there, whether you're a new investor, whether you're thinking about investing, whether you've been investing for a long time. I know sometimes, we get in here 2, 3, 4, 5 years in and start getting discouraged. Maybe it's not going as well as we thought we should, or as well as we thought our portfolio should, but that happens. That, we go through lulls. That's the part of the investing. That's part of the journey. We're all learning along the way. Hopefully we can learn from each other. That's what this channel is about. So as you can see, here's the ticker, all the different positions in the portfolio, total shares I own right here as of the close of business on Friday, current price as of the close of business on Friday, market value here, average cost per share, my purchase price, what I have into each position right here. This does include reinvested dividends, total return, whether I'm up or down. Again, I'm going to show it to you every week, whether I'm up, whether I'm down. You've seen, if you've been on this channel long enough, you've seen my portfolio down 6, 7, 8, 9%, and you've seen my portfolio up 12, 13, 14%. That's the ups and downs of the market. It's just the way it goes. Hopefully over time it continues to grow and go into the positive, but you will have big downturns. I think Warren Buffett said it best whenever he said, if you can't handle a stock decreasing by 50% in value, you shouldn't own stocks. The percent I'm up or down here, again, obviously the ones in red I'm down in, and the ones in red are a lot of the same ones I'm buying. Look, Google, I just started this position. It's already down 6.97%. Oh my goodness, should I sell? Nope, I'm buying more. I'm going to run this to 100 shares. As a matter of fact, I hope it pulls back into the 140s or the 130s or even the 120s next week, even $100 next week. I'm going to buy probably 4 more shares, 5 more shares. If it drops low enough, I might buy 6 more shares. The week after that, same thing, right? Comcast, it's down right now. I'm adding there. What else? NTR, I have been adding a little bit. Last month, I was really focused on that one. I might nibble here a little bit. PFE, this one's pretty well built out position, already almost 10,000 into it. I might nibble there a little bit. Valet, I'd like to add a significant chunk to right now. I'd also like to add to Procter & Gamble, to OC here, Owens Corning. Hopefully this pulls back. It's down only up 49%. I was buying it whenever I was up 60% and 50%. I might add a little bit more there. But anyways, you get the picture. What sector weight each position falls in, quarterly, monthly, or semi-annual dividend payers here. I also have these highlighted in yellow. The most in yellow says that the company here highlighted has raised its dividend already this year. Verizon just announced, they're my most recent company to announce a dividend raise. I'm expecting Starbucks too here shortly. They haven't yet, but Verizon did just raise it up from 67 cents and some fractions of a penny to 67 cents and some fractions of a penny here. Still only, just under a 2% dividend raise, but hey, with a 6.58% dividend yield on cost here, I'll take a 1.9% dividend raise. Not going to hurt my feelings at all. Current yield as of the close of business on Friday, my yield on cost, the portfolio weighting. So what we saw on the previous slide was each sector weighting. This is each individual positions weighting. I do have a rule in the portfolio. I don't want any one position to be more than 10%. Now, that might not apply necessarily for VTI or SCHD. So ETFs, I'm talking about individual positions, not ETFs that have multiple positions within them. So for individual companies, individual stocks, I don't want any one to be more than 10% of the portfolio, and I don't want any one sector to be more than 20%. Again, that will not apply to ETFs because there is a chance that ETFs over time will become the most largest position in my portfolio just by the nature of me shifting into some more safe, stable payers as we go through time. I'll eliminate some of the volatility in the portfolio as I get older and go into very, very safe ETFs that generate enough cash flow for me to live off of over time. That will be the plan over time, but for now, I do want individual position in the portfolio. So estimated annual income is really what I'm after. That's why it's circled in red. We're going to get there in a minute. That's in this column. Payout months here, what the dividend growth is year over year. So you'll see some zeros. BABA, they just started paying dividends, so we don't know what their growth is going to be like. Google, same thing. We don't know what their growth is going to be like. There are others who have stopped their dividend payment growth. Ally Bank is one. I'd love for them to restart it again. Where's another one? Kraft Heinz. I knew going in they had suspended their dividend raises, but I'd like to see them start up here again, as well as some others down here below. And then this last column where it sits at 15% of a 52-week low, this gives me a high watermark, what I'm willing to pay. Google, for example, is above where it sits at 15% of a 52-week low at $139.67. So I want this one to drop significantly. Love it to drop back under that where I can build this one out and try to get this cost basis down. But this company, I really think long term, I'm not worried about the cost per share on this one. But that's what it gives me, a high watermark where I'd like to sit on this one. It doesn't necessarily mean that I'm not adding to the position just because of that number. It just means I'd like to keep my cost basis under where it sits at 15% of a 52-week low. Let's look at Owens Corning, for example, right? My cost basis is $104.78. I've recently added to this. If you remember a couple weeks back or 3 weeks back, I was at $98 per share. I did buy several shares here, so I brought my cost basis up. I'd like to keep it under $126.44, but I have enough room between 104 and 126. I could nibble on this one, add another 4 or 5 shares, and keep my cost basis under this 15% of a 52-week low. So that's what that means. That's just this cost basis, my average cost per share. I'm trying to keep under this cost basis here. This does go up over time as companies' 52-week low bottom changes. So total shares, 5,678.689 shares. Market value of the portfolio currently worth $292,464.75. This has come down a little bit over the last couple of weeks. Purchase price, I have $265,513.54 into the portfolio. This is including dividends reinvested. My total return, I am up $26,951.21. This is not what I focus on. I say that whether I'm up or down. It doesn't matter to me whether I'm up or down. It's not what I'm focused on. Percent return, 10.15%. Same thing. I like to see it in the green, but it's not necessarily what I'm focused on. I'm not trying to beat the market. I'm trying to retire early. That's what I'm doing. Some people might be out there trying to beat the market. I'm not. I'm trying to pull in as much consistent dividend income, as safe of dividend income as I can, so I can eventually retire and live off of the portfolio or use it to invest in businesses to live off of in the long run. Current yield of the portfolio, 3.996%. My yield on cost, 4.401%. And this, the reason it's circled in red, this is what I'm focused on. The dividend income provided by the portfolio paid out over the next calendar year by all the positions in the portfolio. It goes up typically, other than some recent sales we've had, it's back to headed in the right direction, back on the upswing here. Currently sits at $11,685.99, and the idea is to have this grow over time, whether the market's going up, whether the market's down, whether the market's floating sideways. We want to see this to continue to grow as I add new capital in every week, as positions in the portfolio increase their dividends, as they pay out dividends like we saw. That's what we want to see, and we want to see that dividend growth over time. Dividend growth so far right now in the portfolio sits at 6.0%. MPW, losing MPW did hurt us a little bit on that aspect. But again, I am expecting BABA to raise dividends. So that's not going to be a zero for very long. So that should help. with our dividend growth, I'm hoping that they grow pretty quickly as well. I'd like to see double-digit growths, or at least high single digits, 6, 7, 8%. Same thing with Google. I'd like to see double-digit growth from Google. So we'll see what their dividend growth ends up like, but I do not expect it to be zero for very long. Well, that is really it for this one. Thank you for tuning in. Really appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Drop a comment down below. Like I said, I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. Let me know what's going on in your portfolio. What are you buying? What have you been adding? What are you watching as the market pulls back? What is on your watch list and you're waiting to pull the trigger for the right price? Let me know in the comment section down below. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great weekend, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or see the advice and counsel of a certified financial advisor.